Friday, but now we have another red bar ignored, clearly breaking out of this consolidation, and it's gapping up. So that one looks fine. We're in a couple oils. Those are all fine. Lennar still is in there. We have a 55. This is our problem child from the put spread. And here's the wide range bar. And we sold the put spread on the pullback into this wide range bar, and we sold it way out of the money. So as long as this bottom holds, we're okay. But, you know, it is what it is. I don't like that deep retracement. Apple. We're in. That's looking great. Just a slow churner and a nice gap up with still room to go. As long as the market continues, this should just keep churning on up. VXX. I'm in a two call spreads on that. That was awesome entry, and that just continues to head down as the market not only stabilizes but moves up. And nothing to do there. All right, yeah, all these oils are fine. Nothing to mention there. All right, that's it. So that's my kind of quick, well, no, that's not it. Let's look at these pre-market gappers from earnings. Sorry about that. Goldman Sachs here, sloppy Friday ugly bar. It is churning up here a little bit. Let's see, 261. So it is trading over yesterday's high, but you know, you still got a lot of resistance here at 263. It's not doesn't interest me. CMA is gapping down, but there's a lot of support there. That doesn't interest me. Northern Trust up $2 here near 107. So it's gapping over this ugly bar. See, it's gapping over Friday's ugly bar. We'll see if we can get a pullback on that, but still not clean. I mean, these banks they're just not clean. Okay, but we might get a put spread out of it. J&J, now this one interests me as a possible put play, put selling bull put credit spread. So it broke out yesterday, even though it closed in the lower half, but it had earnings this morning. So, you know, they were nervous. So it's trading over yesterday's high. And I like selling options on stocks within the first hour after earnings because they're still have high volatility. Now, a lot of it's going to come out, and we call that the volatility crush, but 100% of it doesn't come out. And that's how we prefer trading earnings for the most part, so we don't have the overnight gap risk. We'd rather trade them the next day. So Johnson & Johnson here is on my hot list for a put spread if I can get a sufficient credit. Now, the strike that I would sell is 129.50 would be ideal under this multi-day support consolidation, which, you know, you can see it here. PGR. Oh, what did I just do? All right, see, it's hard for me to tell where this is really gapping. Yeah, shoot, I just messed something up with this. Let me reload this page. Well, I messed something up here. All right, I'm just going to reduplicate this real quick. There we go. Yeah, whatever I did, I messed up this extra space. Link it. There we go. All right, so PGR. Yeah, so I'm going to watch this, but this also could be a great put spread over 30-minute high. Look at this weekly, just railroad track 20 and 50. Monthly is getting extended, but, you know, short-term put play would be nice. I saw this one going through in the gap list. Look at Roku, we've been watching for a while. Way oversold weekly into this breakout bar, still a downtrend, but this gap down here, I call this a bearish gap that bullies. It's when it gaps down and then quickly fills the gap within 30 minutes. And that's what that did. And it not only filled the gap, it kept going. And so there's buyers here. It's stabilized. It's still in a downtrend. It hasn't taken out this prior pivot high, but now look, it's gapping up here to 35.50. So 35.50, it is gapping over this prior pivot now. And Roku has good, you know, premium juice. So Roku is on my watch list today for a put spread. UNH, another earnings trade. Beautiful, beautiful put selling candidate. So this one is on my hot list today also. So it, you know, had a breakdown, little retest higher low, 100% retracement, still sloppy as can be for trading the stock, but now earnings gap up, wide range bar, pullback. I mean, if you were trading pre-market, I mean, this is a 15-minute chart. You can drop down to a 5-minute, and this you could have traded this pre-market off the charts. That's a beautiful pattern right there. So gapping up to 236.50. So I look at that on my daily, and it's up here. So that's now a little bit extended. So ideally, I would like a pullback in the first 30, 60 minutes or 30-minute high. And obviously, I want the put spreads to be juicy. And I would do that all the way down here. The 220 would be wonderful, but 220 to 237 is $17 out of the money. So I don't think the market makers are going to give me much juice. All right, 9:16. So I will turn it over to Greg when he's ready and get ready for the market open.
Good morning, everybody. Give me a sec here. Bring this up. All right, so Netflix has the market waking up here and some other stocks of earnings. And then you can see this chart here on the left. That's where it's trading right now, going sideways here. So I always look at a gap as where it is in relation to the past. And what has been happening a lot, pretty much a lot of things that I see that do gap up day to day, you know, they're nice gaps, but they don't clear all the resistance. And this certainly looks like it should be able to clear this high here. But we'll watch this and see if it starts coming back in. It should not fill the gap. A gap like this, you know, when they're really bullish, right at the moment, it certainly looks like it is, they do not fill the gap. So ideally, going sideways for a little while. You can see it's 329, 330 is right here at that high. So, and then we see if it goes higher from there. Goldman at 361, not 261, 262. So really not. Let me get a data window here. Okay, so what I want to look at what the high of this bar is, 262.50. So it did push above it and came back in. So not a great gap, but this could be a tradable setup here. And it's going sideways there on the 60-minute above that high. It's got, not a complete open void, but definitely something that could move higher. And of course, I want to look at, well, that doesn't look like much of anything. When I say I want to look at other stocks within the sector and how they're being affected by Goldman moving up, since they got clobbered last week when they reported earnings, which were good. So they're really not doing much. So maybe that's why Goldman isn't making much of a move here. Anyway, as the morning progresses in the first few minutes, I will check other gaps and stocks that are moving above support or below resistance, looking for spreads. Amazon was looking like a sell setup, actually an ideal type of sell setup here, but it's gapping up and negating that for the moment. So that high is 59 and is trading above that. So this might gain some legs here, which does support this market being able to go higher. So let's take a look at the futures here. And you can see they just stop right at that 50 MA. Happens a lot. And now they're above it. They're trending higher very nicely on the 60-minute. And so where might they go? Right? Look, where's our next reference point, if there is one? So what we want to do, of course, and I don't look at areas of support or resistance as exact points on a chart. There's a lot, about that, meaning, looking at that specific number and that's going to be the exact point. You don't want to do that. When you see this area right here, it's an area. So whether it stops here or stops here, who knows? But what I do know is this, that the way that this came down, that these S&Ps have the potential to move up into this area before they reach some reference point of resistance of any significance. This certainly isn't. So we'll see how that does. Look at the Dow to see how that looks. Now the Dow is actually picking up some steam here and showing relative strength, and it's already into that area. So that's interesting, but it could keep going. Now, and let's just look at the NQs here. And that's got room to go. So maybe the Dow will just keep on chugging through that resistance. There's that high up there. Right? So that's our reference points. Now, when we look at the daily time frame and just, general, kind of stepping away from the intraday charts and pullbacks that will occur on there during the day, from a day-to-day point of view, does it break a prior day's low? And so, and as we look at that, and we've got the ETFs up here, just use the prior day's low as your initial reference point. Then from there, one of the observations is it still above its opening price? So as prices move up, we look at, are they trading above their opening price still? Are they trading above yesterday's close? So within my minders, once I put stocks in minders of interest, or just a general minder, two columns that I have is change from open and change from yesterday's close. And it's a real easy way, if you're scanning through your stocks and saying which ones are doing well today and which ones aren't. So as a starting point, two green columns above the open and above the close, they're doing better than one that's below the open and above the close. And the ones that are both red, obviously, are more bearish. So you setting up your minder that way, as you can see right here, change and change from open. And then, if they're both green, you're going there. And here we can see oil is trading lower. It's in an uptrend, yet it's trading lower. It's trading below this minor support level. So oil stocks, which have done well, I'm going to focus on them a bit for short setups intraday. Now, they still look like they can go higher, which they've broken out as XLE has. And we've got positions, but in options positions. And if this pulls back, it's really not going to make any difference, as long as they don't pull back to those strikes. And from the point we put them on, it's very unlikely that they will. However, one that I was looking at yesterday and actually shorted and covered at a break even, I thought this would roll over, as the 5 minute was going sideways. You can see here on the lower left, and it just didn't. So, and it's still hanging up there right now, but with oil starting to give up a little, and some of these that are up, as this is so many days in a row and it gapped up yesterday, they may come in for a couple of days and set up new buy setups. So we will find new opportunities today. Here, this is just what's trading relatively actively. Square, which I had on the list, kind of came in as the market stalled there a bit. I'm looking to see if this can find some legs here and get turned around, because the weekly chart still looks pretty good. And you can see right there, it's just pulled back, and not a perfect kind of buy setup on the weekly, because it's pulled back into the bottom of that wide range bar. However, we've got multiple weeks down and it's stabilizing here. It is in an uptrend. I'm looking to see if this thing can get itself going and pushing back up here. We're going to see what this does here. Let's just go to the 5. I've got a 5 minute, but let's just look at it here. Still in the uptrend on the 5 minute. And my primary time frames intraday are the hourly and the 5 minute. And if there's real momentum, I will go down to the 2. But my go-to time frame is the 5 minute, looking for that to be in alignment with the hourly, and then support, resistance, and such. So, all right, we got 4 minutes to the open here. So let's just see if prices can hold on here, whether they gap and fall or gap and run and do whatever they're going to do, and assess them, and we'll take it from there. So give me a minute to switch my computers and get set up on the other one, and then I'll bring up the screen where I have all the scans, and we'll see what pops here at the open. Give me a minute. Here we go.
Yep, UNH gap is too big. J and J selling off, giving up that pre-market gap. PGR. PGR, 30-minute high or 10-minute high. So I'm going to immediately see what I can get from the option man. And yeah, see, it's just very hard to trade earnings within the first 5 or 10 minutes because they're so spready. So the $60 puts that expire Friday are 0 by 50. But sometimes I play market maker on these wide ones. I'll go way out of the money and go low offer, again, provided the chart is holding up. Nothing to do there. Roku pulling in. Let me see what juice we can get there. Too spready again. But we can keep an eye on next week. Let me check earnings.
Interesting. Well, this must have reported earnings, I would assume.
Greg,
Yeah.
do you have earnings for Roku, please? I'm not getting them. ROKU. Yeah, CMA had earnings. Yep.
516.
All right, perfect. So if Roku sets up, we can do 10 days from now, a put spread. So I'll keep an eye on it. Our open positions, yeah, some oils down, very marginal. They're fine. Our DHI, nice follow through. That's the housing stock. Wind is fine. Google. Google, we can watch a pullback, but it's coming in kind of hard. Our robot oil company, WDFC, had a nice little gap, but now it's extended on the hourly. So, you know, if we could sell a Friday call to convert it to a covered call, that's an idea. So let me see what we can get paid. And we can't get paid anything. It's 0 by 30. But it's here's, you know, Greg was talking about time frames and et cetera. Greg, pull up WDFC, please.
Say it again, Dan.
Yeah, it's our WD40, WDFC. So look, the hourly is extended, but if you're trading off the daily time frame, it's bullish. You got to sit through a pullback. But if you're just a more active trader, you know, there'd be nothing wrong, in my opinion, of selling a little bit in the strength. And then if you get your pullback, then you reestablish at cheaper prices. But, you know, the daily is still very bullish. Our NTGR is breaking out of consolidation. That looks good. Netflix coming in. Now, if Netflix were a bearish pattern, when they sell off this hard, then I would consider selling a Friday out of the money bear call spread. But the pattern is the daily is not bearish, so I wouldn't do that. Our LFIN still halted. I mean, I'll luck out if it just expires worthless on Friday. Our Apple churning up. It looks good. Facebook here has a little morning strength.
You know, Dan, when it gets slower, a little later,
Yep.
before we break, maybe a little explanation on that. What you said, if it expires worthless, because that's a halted stock, right?
Sure.
Yeah, I think that would be interesting.
Sure, we'll do it again. Sure.
I mean, there's probably a lot of people in the room that have no idea what you're talking about here because the position was put on, you know, in the past. But
Right.
it's an interesting situation, of course.
Yeah, oil coming in. So, Greg, what about your Oxy? OXY.
It's chopping around here. I have it up on my screen watching it.
Yeah, it's a whippy 5-minute range, but under the low with the sector being weak.
Absolutely. Crude oil is trending down on the 5. S&Ps are coming in quite a bit here. An alert on paychecks. This Dollar General, folks, keep an eye on this above the high of the day. I'll come back to it. It's a nice gap, cleared all this resistance. And this is what I was talking about as far as stocks that are gapping, you know, that don't clear all resistance. And this one has, and it's got room to go higher. So it's just grinding here. And so far, it's showing some relative strength to the market coming in. So let's see what it does. Let me take a look at paychecks. Since I said an alert, it gapped down here. Came right back up again. Earnings are far off. Was in the gap down list. Gap down 3%. And it's the daily chart. Why even set the alert? It hadn't, it's kind of just been a grinder under the 200. I would have preferred that it just traded just below these lows instead of the sizable gap. But so far, this DG is holding. Q's new high on the day.
Oh, Greg, yeah, I was just looking at your note to me. A subscriber took our cost, C-O-S-T, bull put credit spread that I called invalid yesterday because we didn't get our credit, and I just wanted to compliment him and also mention that that's a perfect thing that traders can do. You don't have to follow our recommendation perfectly. You can take a different strike, you can take a different expiration, but use us as awesome idea generators, not only in terms of the patterns, because Greg is just the most phenomenal scanner, but we throw out stock and option ideas, but always feel free to make it your own trade, take ownership of it. And you do that by taking an idea and saying, yes, that matches my trading plan. So yeah, we just had a note that an individual had a very nice profit on Costco, even though I canceled it. He still did it, and per his plan, and it worked out very well. Wow, yeah, look at that VXX. I remember talking to Greg one day, and I said, the day we went into it, I said, we have to pound the VIX into the close. And he's like, okay. And look at the VXX. I forget exactly what number we said that, but it was, the day after the initial, it was the day we added. Let's see how much we've made on that. Wow, it's down to 11 cents. This put spread, I'm sorry, the call spread, the May 60, $75 call. Let's see what we sold. We sold it for 56 cents and it's 11 right now. So I think just to, protect our gains, because it's 17 days to expiration, I'm gonna say bid 5 cents to close and or over a prior day's high. Now that's a judgment call again, because somebody might say the odds of this expiring worthless are incredibly high, and I agree, but is it worth paying 5 cents a share, which is still over 90% of a max gain, just to move on to the next trade? And then we have zero risk. We have zero likelihood of this being a problem child. And that's a judgment call, similar to the Costco. So just because we say bid 5 cents to close, there's nothing wrong with your trading plan saying, thanks for the idea, Gibby, but I'm just going to let it expire worthless. Nothing wrong with that at all.
As on this DG, it can see that little topping tail on the 5 minute or on the 2 here. So we want to see if buyers will step up and hold this, the low of the day area. And if it can get back up above right here, this 80, what is that? 77 and 82 back up there. I'm going to go long this, looking for it to move higher to wherever it's going to go. If it drops below the low of the day, then do nothing.
Well, Greg, I'm curious. You said that I'm adjusting this trade. You say do nothing. Why not? You know, a intraday double bottom or shakeout or whatever. Just watch it on a thumbnail.
If it happens.
Right. But you said to forget it, and I'm saying,
well,
you know what I mean.
It's not going to be doing what I want it to do now. So I don't know. I'll probably move on to something else, but it could set up. Just noticing, you know what? Nothing to do with it right now, but Snap is coming a bit to life. The daily chart looks like nothing, but it's down a whole heck of a lot and into this prior support here. So I'll keep an eye on this on the next couple of days to see if it can shape up down here. And Twitter too. Twitter looking a bit better because it's above the 200 MA, but it's getting some attention. Keep an eye on it.
Yeah, Twitter had a beautiful pre-market consolidation also. Greg, Twitter must have earnings next week because the juice is off the charts. 24. And I know how. Yeah, I know. Yeah. But see, again, if you know, we have some clients actually that tell us that. They say, you know, Dan and Greg, get me 50,000 shares. And, you know, some you can do with puts, whereas if you get them, fine. Sometimes they say, I want them. But this would be one where I would sell the $27 puts for next week are 77 cents. Now, think about that. Let me do the math for you. I can't do that one in my head. 0.77 divided by current price, 30.35. That's an additional 2.5%. And 30.3 minus 27 equals $3.30 divided by 30.3 is 10.9% cheaper. That's what I call my cushion. So you can, so for a hedge fund that says, hey, here, you know, we have different parameters for every client, of course, but they say, yeah, I mean, I'll take 75 cents a share, or, I mean, as pure profit, as an income trade, or I'll take them with a cost basis of $26.23, which is the $27 short strike price less 77 cents you just put in your pocket. Hey, that Tesla broke down, Greg.
Yeah, it was weak yesterday.
Yeah, let's
Well,
see what we can get for Friday.
Mr. Musk threw the gauntlet down to Goldman Sachs last week when they downgraded it.
So Friday, the 310s. It's not worth the risk. It's only 45 cents by 50. So you would have to go out to the following week if you wanted to trade that.
This one looked kind of interesting. This Blackstone bottoming pattern here, but it's going to report earnings in 2 days.
Oh, PGR. So that's a beautiful put candidate. Let me now see what we can get paid. It was too illiquid earlier. Yeah, I would have to go out, and there's no weeklies, so I'd have to go out to May. Yeah, I don't want to do a May.
Look at Dan. Look at Chop for a put spread. Look at this retest with a bottoming tail bar here. Earnings are in 1st of May. There's anything that?
Well, yeah, I'm sure there is because he's always juicy. He's in the wild boy camp. All right, so 114. It's just too spready is the problem. The 114s for Friday are 40 cents by $1.15. That's crazy. But so here's another example. Is it easy for you to pull up your option quotes, the puts? Because here's an example where I would try to play market maker. So for this Friday, the out of the money puts. So look at 114 and lower.
Well, it goes all the way to 110 from 115.
That's because you're looking at May. Look for Friday. So April 20. So look at the bid and the ask. So 40 by 1 and just keep going lower. So what I do when I play market maker is, so look at the 107s, everybody. It's 0 by 60. So 107 is way away. So here, watch it. I'm going to show you. So I'm going to sell a 10 lot right now. Well, I'm not going to sell it. I'm going to put an order to sell it. So I just sent a 10 lot at 55 cents. So you see that? I'm now low offer. And then the 106s, I'm going to do the same thing, 45 cents a share. And then you can just, keep going down. So look at the 103s, the 102s. And I call it kind of a lottery ticket because, unless the stock tanks and then I get filled on, all however many orders I have out there if the thing really tanks. But I would put a cancel of my order if this went under 119, because then it's too deep of a retracement. But that's a lesson on how I, play market maker on wide spreads. All right, pump, watching if double bottom. Okay, you got that.
I can see it, Fabio. What Fabio's looking at is a nice gap that cleared this resistance here and looking for it to create support intraday to go long. I like the strategy, sure. And Fabio, sometimes the lower high and the lower low actually will be the setup versus it actually retesting the low exactly. But you've got no trigger as of yet. But if that 2-minute was to turn into a bottoming tail bar, that would tell you that there's buyers in this area. Oh, just an alert for today.
Here, Greg, look at Tim's PLNT. Looks beautiful. Beautiful. And then, Tim, if you were more aggressive, you could have done that 5-minute, pullback, and then you're buying it on the basement floor. Because now, if it
double bottom.
Now, if it makes a new high, it's probably going to pull back. So, but if you're a swing trader and want in it, then you just got to buy it because your stop is under the whole consolidation on the daily. So it also depends if you're day trading or swing trading is, the microscope on how you enter and where your stop is. But if this sets up a 5-minute high or low, I like it too. I'm gonna check puts, of course, for me. And Greg, what are your thoughts on a swing?
No, it's right at the prior high.
But doesn't the 7-day consolidation?
It suggests it's going to go through it.
Right.
I don't buy at resistance.
Okay.
But even Tim, on this setup, what I would have done if I would have saw it, rather than wait for it to take out the high of the day, I would have bought it down here when it took out the high of this bar, would have stopped below the base. That's why I'm buying at support. And I would have share sized it for below this base. And then I would have considered, depending on what it does, of course, adding at the appropriate time.
Now you would have to hold over earnings, but look how far away the $35 puts are for May. You can get 50 cents for them. So that's 1.5% return. And it's $4.65 away.
Sometimes it works.
Right. Yeah.
It's pretty far away, even if it disappointed for it. I mean, it certainly could gap that far, but yeah.
Right. And those are the discussions Greg and I have when we do decide to hold something into earnings. Like Greg, check out our CVX.
That's reporting today, or it did report, isn't it?
I thought next week, but I could be wrong.
26. Right?
Yeah, 10 days.
I was thinking CVS.
So here's my question to you. We purposely said we're going to hold our put spread over earnings. It's far away. It's a 110, 100 put spread for May, but we're already at 50% of profit. So my question to you is, well, let's see, maybe I already did that. I took half yesterday for that reason. Okay, so I took half. I said, hey, let's just book half because, of earnings. But my question still remains, which is, and there's no right answer. Should we just trail a stop under a prior day's low to book, to book our profit, which will be even more profit because it keeps churning higher? Or do we sit through earnings and try to let it expire worthless? It's back to your own trading plan again.
I would just hold on until the end of the week, which is probably going to be worth even less if it turns higher. And then I would exit it at the end of the week. I mean, under a prior day's low for this isn't really mean a whole heck of a lot. If I was a swing trade, I would.
Right.
I mean, you're talking about something down here at 110, and it's an oil stock. If it was a biotech stock, yes, I would probably run at any sign of weakness like that under a prior day's low. But even if this disappoints, it's not the type of stock that would likely gap that far.
Okay, and see, so that is an excellent point when we decide whether to hold over earnings or not. We have to look at the historical behavior of this animal, both, in the charts and maybe a tiny bit of, fundamentals, like you just said, what sector is it in and how's that sector doing? Because it's all about the likelihood of it having a catastrophic gap against us. And that's what we're trying to assess. FANG stocks like Netflix, all the FANGs, we know that they're going to gap significantly because of their track record. Look at Google here plowing. Man. Wow. That was a fantastic put spread candidate. Even could have been a bull call diagonal with that big price void. And Amazon is moving on uptown. So they're dragging the cues with it. Look at Amazon, looks like a magnet now to the gap fill. I wonder why Amazon doesn't split its shares.
Why doesn't Warren Buffett?
Well, I know the answer on Buffett because he doesn't want, day traders playing around with his company stock, manipulating.
Really? That's it's like King Kong saying, hey, you ants over there, I'm worried about you guys.
Well,
maybe doesn't want the little people to make money. You got to give it to my buddies that are running the hedge funds and mutual funds.
Yeah, so why aren't they picketing in front of his office in Omaha?
Because he's a nice old man.
So if Amazon put spread for Friday, you could do the 14.20, 14.10 for 75 cents. So that's 3.5 days of risk.
I was going to say, this is buyable on a pullback. I like this daily. It's got earnings on the 1st. That's okay for now. Yeah.
Yep, that's pretty.
Dan, put spread on Amazon? Don't have anything there worthwhile doing?
Yeah, that's what I just said. 14.20, 14.10 for 75 cents. But I was looking at Grub here too. But Grub you have to hold for 10 days. So yeah, Amazon, those are the numbers I gave you. 14.20, 14.10. It's now 71 cents. It was 75 a few minutes ago.
You don't like that?
No, I do. Are you okay with the 14-20 strike?
Yeah, I would have to go back under this base. And I mean, if it even gets under today's low or close to that gap fill, probably going to kill it.
All right, then here it comes.
And that's a bullish gap from this reversal here, this little double top type of situation. And Home Depot's a mess, but it's okay.
Well, look at Netflix threatening the high.
He's one of your old favorites, Dan. It's trading really slow.
Which?
Restoration Hardware.
Yep, I remember the old RH.
Pull back here. Maybe a day of rest right here.
Oh, Goldman turned red. Yeah, RH, that's another good example of I wouldn't trade the stock, but weekly, daily, calling a short-term bottom. Now, Greg, if margin wasn't a problem, you could, there's a, and you know, this is where I go, what's the term? Just price hunting. Because on RH this Friday, somebody has a 10-cent bid at $80 strike. So if, you know, if you could try to get maybe 20, it's 10 by 50. So if you could, you know, try to even get 20 cents for 3 days. But let's go out to next week. When is earnings, Greg? Because it's juicy next week.
Pump on what?
RH.
6, 7.
Wow, we could do the, we could sell the 79.5s for 60 cents naked. And the reason I say naked is because the spreads are so preposterous that it's going to be impossible to get a good credit on a spread. So you just do it naked if you're happy with the reward to risk.
Not too much really moving here. A few things, but the ones I see moving intraday are at resistance on the daily. So certainly not the place to enter, but watching similar to, well, Grub isn't at resistance. That's why I like it better. But things like Boeing that look really great on the 5-minute, but right at the prior high on the daily. So I have to wait for some pullback here, some consolidation. So this is example like Boeing on the 5 could form a buy setup, but the daily just isn't attractive. I see a lot of stuff like that.
Greg, look at this Roku I mentioned pre-market.
Mm-hmm.
What do you think of that for 10 days? Don't you have a gap class that you've taught?
Yeah. Well, had nothing to do with options.
Yeah, it's just too spready. I'm not going to get sucked into that. Greg, remember CMTL, the 1, 2, 3?
Mm-hmm. Yeah.
Very nice. Well, that CMTL was a a multiple time frame perfection also. Daily, weekly. Bobby was asking you about Tesla.
A little minor breakout failure on the spiders. Let's see, I'm watching the cues here to see if they trade under the breakout bars low. It's threatening right now, which doesn't mean much intermediate term, but for a day trader, if you bought that breakout, I would step aside.
Just, I mean, not to brag, but just to show why I just love selling these short-term spider options. So the ones we put on yesterday for 50 cents a share, Greg, remember on the pullback?
Mm-hmm.
2.5 days of risk. I did a 20 lot and I'm up $840. So I've earned 42 cents of my 50 cents in 24 hours. Well, actually, yeah, buying to close is only 6 cents.
All right. Now that you bragged a little, what are you going to do for us today?
Well, I think I'm going to tell them to take profits right now, or at least half. It's another judgment call. Do you want to close the whole thing or half? They expire tomorrow, the 264 puts. It's just overnight risk, but
No, I would be foolish to close it out. I mean, what's left in it?
6 cents, 6 out of 50.
Well, your platform allows you to close it for free for that 5 cents. How much is the 5 cents worth?
Correct. If it's 5 cents or lower, correct.
So what is 5 cents worth in dollars?
Well, on a 10 lot, $50. On my 20 lot, 100. So then I've made 900 out of 1,000.
Well, I think you can let it go. And if the market starts falling apart, you can decide to close it, which whatever. So instead of whatever, you'll make a little less and maybe you get it all.
I totally follow what you're saying. But I'm going to tell him to bid 5 cents for half.
It's funny.
All right, I won't. But it's one of those things again. It's
Guys, let's short VLO below 104.53. And a little more conservative, you could do it under 50, but this might sound a little crazy on the surface, but I'm going to give this a dollar stop. And I know that seems far based on this pattern, but I've seen, and I don't know that it's going to do this, but I've seen this pattern take out that low, wiggle back up, make a higher high, and roll and die. So I will share size it for a dollar stop and then look to add. You know, because in reality, I would rather be shorting it up here. I don't know if it'll get there. I mean, it may get there if it doesn't trade below this low. So if you understand everything I'm saying here is a half size. If it trades below this low with a dollar stop, I'd look to add. But if it doesn't and it goes up into this area, give or take, you know, I don't get caught up in exactness, but better with the square. Kind of where those two big red bars overlap each other. And look at the daily chart. I mean, it definitely looks like something we want to buy on a pullback, but multiple days up and a big wide range bar on volume, which is a signal that prices are stalled. So I look at this as a day trade. And, you know, if it goes down a buck or what have you, we'll take it. Be right back. Well, it looks like it wants to go up into that area, which is fine with me. Like it better there. Well, it's going to change now, Fabio, since it didn't trade under that low. Now we're going to look for it to reverse up there in that green area. So it actually may push up close to that 105.50 area for it to turn. Well, it shouldn't go to 105.50. It should stay below that. It should go right in here somewhere. You know, you see what it's doing here? Now, the ones that got short here, they're probably getting a little nervous and covering so that little range expansion that's going on. Let's take a look at Tim's ALRM. We'll come back to this. That looks good. Nice. Got room to run. But these bottoming ones, Tim, you know what? I wish it does for you, but these type of bottoming ones, they typically come back in. They don't run like, even though it's got the void here, they typically come back in because they've been beaten down, but hopefully it just keeps going for you. Looks good.
Well, and I like the big old shakeout at the end of February.
That's a huge plus. However, you know, it's just been my experience over many years because, you know, they have been under distribution. You know, you've got lots of sellers up above that at some point they're going to be like, all right, it's up $2 from, you know, wherever. I'm just happy to be done with it. And that's just part of the process of, you know, it making its bottom before it really picks up steam. But it looks good.
Yeah, so does your grub, but we got no pullback.
No, but today's the first day of the turn, so maybe later this afternoon. S&P futures look like they got a pretty clear shot of going to 27.25 or a little above on the daily chart, that is. I mean, there's wiggles that are going on here intraday are just, you know, rather messy. You know, the remedy for getting a little disturbed by all of this intraday chop is not to look at it. It's like watching a horror movie, you know, or a commercial you don't like. Right? Just shut it off and go with the, in this case, the higher time frame.
Hey, Greg, don't forget to pay your taxes today.
What's that?
What's taxes?
I don't live in Texas.
No, taxes.
Gotcha. The spiders and Qs, we got, trading into the second hour here, which has at 58 minutes to go, trading inside of an hourly range. Obviously, gap up a little progress. The spiders just close with a. I want to take my eyes off of this one. On the hourly, that's a 2 hour. Just kind of like going nothing there, but looks okay. It's holding on for now.
So, Greg, on our spider directional, the bull call diagonal, just an FYI, we're up 350 on it right now. But we still look higher. But I'm maybe give them a target of $4 for a third lot. I think I like that.
Now, if the market does push higher here, just looking at VXX as a reference point, it's got a little ways to go to that prior area where it's popped up from each time. Oh, just keep an eye on that.
Greg, your Delta Golf has a 50% pullback, but I don't like the hourly now, so never mind.
There's no pattern.
Yeah. Your shop and grub keep churning.
Spiders new high.
This is a bullish day. Wow.
I got my setup here in VLO, and I was waiting for this bar to complete. And I'm going to use a stop above 105.50. All right, we'll wait and see what it does. Tim's looking at PSTG. It's right up into resistance, Tim. So yeah, the weekly looks okay. A bit of a deeper pullback. You just have to sit through wiggles. This is one where you just, you need a decent stop, because it's the only way to participate in it. It's at a point where, that pullback, the ideal textbook kind of a pattern on this is one in which it chops around sideways here for a couple of days and then takes off. So where it absorbs that resistance there. One of the trading methods, strategies is one in which, I can remember this from one of the trading challenges that I did. The guy sold software, and the software was one in which, it had like this kind of a setup, right? And so rather than buy it on the pullback, the idea was, and I forget what he called it, but it was like you bought up here. So he had names for this kind of thing. And so you bought when it took out the high after a greater than 100% retracement. And the whole in that method was the stop, meaning, it didn't put the stop way down there. And if it had the momentum and kept going, it worked. But when you're going to buy like that, meaning, so if we look at this daily chart and to say, what if you bought the breakout? You bought the breakout on the daily chart here, right? Well, thereabouts. It would be a similar type of situation of, greater than 100% retracement, but you got to put your stop here, because anywhere in between here, where it's kind of like a crapshoot. Because once it comes here, it's already made the run. It could pull back. So until you get some type of corrective action, how do you know where to put the stop other than just kind of spitballing it and saying, hey, I'll just put it 50%.
This isn't the time to do it, Greg, but look at Oxy. That's pretty good juice for a $2 wide. Bear call spread for 2.5 days. That's good juice. That's almost, 23%-ish.
I'll do it.
Well, right here at the low or a little bounce.
If you get it.
All right, what's 42? We could, all right, I'll just sit here and watch it and I'll get it loaded up. But 75 is kind of tight, but stop has to be the high.
Let's see if any of these other oils are. That's interesting. OIH doesn't fill in with the stocks within it on this platform. XLE. That was that one from yesterday. Any juice in this, Dan, for a few days? Expedia?
Let me take a look. Yeah. Yeah, it's getting its sea legs back. Let me check the juice.
Earnings are next week.
Oh, well then forget it. I mean,
Oh, that's what I said, for a few days.
oh, let me look. So we could do the 106. You know, looking at this pattern, I remember we put in the letter the first higher low in March. We did a weekly put spread on this also. That, as you can tell, worked out beautifully. 106, nope, only a dime. Homie, don't play that game. Wow, look at Intel's recovery, Greg. You know, I know you like that as a core, and we've been selling puts on them, and they've all expired worthless last week. So, hey, good morning, Dan.
Morning, Dan. Look at Trip I have up here. Anything? Yeah. This one next month is earnings.
All right, so we could go to next week. And the $40 put is 30 by 45. So if you did a 30, I'm sorry, a 40, 36 is 30 cents. Yeah. That's close to, 10%. But 40 is a little tight, so nah, it's not exciting me. Unless you went out 2 weeks, and then, yeah, I'm not. They were spready too. I like Grub better. If we can get a pullback in your shop 15-minute chart, not a single red bar.
Getting into some low volume stuff now.
Hey, Greg, perfect time. I bought my new condo because I'm out of business cards. So now I can put the new address on it.
All right.
Yeah, we had a put spread in the Qs over the ribby bar, but we didn't get our credit. But that's okay. We've been pounding the spiders pretty good, both directional and income. But it looks like things are just inflating up right now. So
very slowly.
Yeah, I mean, I know it's lunch, but if you see anything juicy, and Micron we're out of, those puts expired worthless. Our XOP, I have a instruction to sell out of the money weekly call under a prior day's low, but look at that, still just chugging slowly. Yep, all our positions doing well. SYY from yesterday, look at that breakout. That was beautiful.
Yep.
At XLK, strong with the Qs. Wow, yeah, look, XLK. I actually like XLK better than the Qs on the daily.
XLK. Well, they both have room. I mean, look, everything is coming up to its you know, at least point where is going to be a test.
Right. But yeah.
I mean, I mentioned this morning in the pre-market commentary. It's like, okay, that is the reference point, but this bottoming patterns being bigger than it is suggests that it can get through it, but it's probably going to stall there.
Right. Or overshoot it and come pull back. But yeah, I agree with the bottoming pattern part that I think it has the fuel, as you call it, to go through it. Totally agree.
Yeah. And in addition, the red bar 2 days ago, as far as, this goes right at this prior high, adds kind of like, when you talk about fuel, kind of like filling the tank a little bit, because you had sellers come in and, looking to knock it down, and that didn't follow through. So, it has two effects as we look at price patterns. As to what the effect is to removing potential overhead supply because they're sellers, and in addition, you've got the short covering to add the demand.
Yeah, Dan's asking about Twitter. Yeah, Dan, Greg was talking about that this morning, and I would say yes. You missed it, unless you're trading off the weekly chart, which I don't think you are. But no, I think Greg mentioned it when it was $30 this morning. So yeah, you definitely missed it, but watch pullbacks.
One thing I want to say, what, Dan, as you mentioned Twitter. I mean, I saw this early this morning, but these kind of patterns that, this big wide range bar, and of course, I assume it closes this way. Meaning, if it does, it suggests that it's going to go higher. So don't really feel like you missed it. Just pay attention to it, even tomorrow or the day after, as to how it sets up, because the majority of times stocks that have moves like this, they follow through. And I'll tell you, and I'm not saying that I don't experience that, because I do, because this is the downside of trading stocks, is that there's so much to look at that, you go and you start focusing on other things, and you miss the opportunity in what you were looking at yesterday or even this morning. So we can just put it in our flagged list and go back to that. And here, it's got two great big 1 hour bars when it's right into the 50. Yeah. So I've got grub in there. So we need a pullback. CL, it's doing nothing, but this has got earnings on the 27th, but it looks like it could break out. And this is just garbage. It looked like it could be something. So I'm just going to remove it for now. HLF, I didn't get in that, but it looks like it's going to be a churner to the upside. And the ATR looks good. And here's a perfect example of, look, I saw it, the wide range bar, and I put it in my thing, and I'm not in it. I just got tagged on that VLO. It just kept going. I bet it probably rolls anyway. And oil just, it was rolling over, but it rallied over. It rallied here. And let's see as it turns back down here. Sometimes it takes a few tries on some of these setups that, the higher time frame, say they're rolling like climactics, and they take a little while to set up and follow through. So we're still eyeballing this OXY. The range has gotten even narrower today from yesterday's narrow bodied bar.
Dan, you're saying you're talking about doing a jade lizard. Now, I know what that is from the Tasty Boys, or girls rather. So let me just explain it for the others. It's just doing a short put, a bull put credit spread, it's selling a naked put and selling an out of the money bear call spread. Now the reason, and tell me if I'm wrong with that recollection, but I would not do that on Twitter because it's a bullish pattern. So why would you want to sell anything bearish on it? And unless you're doing a covered call or a bull call diagonal where you're selling an out of the money call just to lower your cost basis. But I would not do it. I wouldn't add any bearish component to Twitter right now because it's a bullish pattern. Greg, oh shoot, that's May. Never mind. I was just looking at Target. I was hoping to get a put spread for next Friday, but no, that's May, so never mind.
Mm-hmm.
Or TJX rather, but yeah, TJX and Target are getting their sea legs back. But Target has a weekly. But not enough juice. Right, but back to Dan here on Twitter. But why do you want to sell a bear call credit spread on a bullish pattern? That is my question to you. So I understand your break evens, of course, but that's our specialty, is putting the right option strategy around the pattern. And so we would only consider something like that if there was major support, but if there was also major resistance, so it was more like an iron condor play, but instead of being short a put spread, we're short a naked put. That's all a jade lizard is. It's an iron condor, which we only do in consolidations with major resistance above, major support below, but you're just short the naked put. And Twitter is a wide range breakout. It's not a consolidation pattern. Your major resistance is, it's the prior highs in terms of putting on a bearish position. Even though it had the consolidation breakdown there at $32, I see that. That's not a pattern that we would put a bear call credit spread around at all, because the way this wide range bar is coming out of multi-week consolidation after a failed breakdown, a bearish gap that bullies on that reversal bar, that was the dead low. That's only created by buyers overwhelming sellers. And I'm talking about the day on April 4.
Where would they put what strikes would they use?
I don't know. Let's ask them. Dan, what out of the money call are you talking about?
I mean, it's unlikely that there's any juice up there, but I mean, if you were saying like, oh, it was a relatively, close, date to expiration, and you can go way out there and really get some money for it.
Exactly. I'm not going to even look because the 36 36s are going to be pennies.
But if you're doing a bear call credit spread and you're looking to do it here, that would seem to me like you're just going to asking to lose your money.
At 11 o'clock, I'm going to get some exercise, but yeah, this is a very, very bullish day. So if, this is a full green light day. I know we're getting extended, but coming out of the base, everything we've been talking about, if you see a low risk setup to go long, not anything extended, like pretty much everything I'm looking at, take these. I'm not adverse to entering new longs here on the right setups, but I just don't see any myself. I like this grub on a pullback, shop on a pullback. Bio's having a nice day here. Our Amazon, nice. Google on a pullback. All righty, everyone have an enjoyable.
I'll hang out with them for a half hour. Got nothing to do till then.
Okay, so he's looking at, I'll look at this before I go Twitter. No, in our opinion, oh, you're only doing a 31.5 by 32. That still makes no sense to me. It's still a bullish pattern. If it works, I would just say that you got lucky. So it's not our strategy style, but if it's yours and you understand what you're doing relative to your trading plan and risk to reward profile, then have at it. But
it's right there. I mean, assuming that it doesn't go any higher.
Correct.
How do you handle that? I mean, you're gonna see that bottom strike there is like, in quotes, striking distance.
Yes,
so you're immediately going to be at a loss. But if the momentum slows, and this is something new to me, and trying to add to the conversation because on my own curiosity as to this type of strategy is not something that I would do either. But assuming it just stalls here. I mean, 10 days to expiration. I don't think it would stall here for 10 days. Of course, I could be wrong, but I don't think it would stall here because if it stalls, it begins to lose value just from the time decay. But what strikes, I mean, right there, I mean, that's just kind of like just throwing the dice.
Well, Greg, and as you know, I think, I'm just guessing that Dan got the idea from, the tasty folks who don't believe in charts. So they're just saying they have to sell tight strikes to get sufficient premium. And, they don't look at charts. So this whole conversation we're having, they would never have.
Mm-hmm. Well, I mean, look, there's lots of different ways to place trades. The thing is, what is the record with that type of strategy? I mean, I've listened to some of their statistical stuff, and it sounds great listening to it. But I've seen a lot of their recommendations, and I look at the chart, and I'm like, that is just ridiculous.
Right, and then they just go into rolling mode is how they manage their stuff. Yeah, no, I like high IVR, of course. Here, let me just look also. Yeah, the IV percentile right now is 96, which is very high. So I like the trade also, but I like it solely from a short put spread perspective. I'll just, when we do condors and are betting on both sides of the market, when we do them coming out of the gate, meaning an opening trade, it's very rare. I mean, we do them, of course, but it has to be very defined consolidation. Otherwise, we leg into condors, but we always 98% of the time, 99%, we start with a bias. It's either a short-term bottom or short-term top. And we use legging into the iron condor, as I said, as an adjustment strategy to bring in more income. So no, this is not a pattern that we would come out of the gate of taking both sides. But I do like Twitter. It's on my watch list for the afternoon for a short put spread, both 3 days and 10 days. You can, the $30 puts right now for Friday are 20 by 21. If it comes in a little bit over lunch, maybe that jacks up to 30. It only has to fall 50 cents, and then it should be closer to 30, 32. And you know how I can predict that, Dan? Look at the strikes right now. The 30.5 strikes are 33 cents. The 30s are 20. So that's telling me that if the underlying falls 50 cents, which is, looking at the chart, I would like it to fall 50 cents over lunch, then I could sell the $30 puts for around 32, 33 cents. And that's 1% of the strike price for 2.5 days of risk. So I do a 10 lot, taking $330, or maybe I even sell the 29.5s. And then I could either have the mentality of no stop because I'll just roll them to next week's, or, the stop has to be the day's low. But as long as this doesn't retrace greater than 50%, then I'm totally fine with having no stop, with the mentality of, I'll just roll it and manage it day by day. But that's it. I think you have a, feel for our strategy now, and I'll be back after lunch.
Alrighty, guys, if there's anything you'd like me to take a look at, any positions you're in, we can take a look at them for a little while here just to see how they're doing. You just type them in. What do you think? You know, Robert, I've been looking for these oils. I think over the next couple of weeks, they can go higher. Right now, I was thinking that they should pull back a little bit. You know, and they're holding so far. And look at XLE; they all pretty much moved the same. They just moved up a lot, you know, over the course of a few days. And while they come out of a base, well, I got tagged on that. I mean, I gave it a wide stop, and it got through yesterday's close anyway. You know, I entered it, I shorted it here. I gave it a wide stop. It kept going. So now up at this prior high, you could do it, you know, at that resistance, but it's not the kind of play that I do, T. I mean, the daily certainly suggests it's going to come in, and you know, if you wanted to drill it down to a 1 minute and look for, you know, some type of scalp like that, you could do it. But you know, I prefer to have some type of trend break like this. You know, it got tagged and it came up into this little resistance here, and you know, clearly, you know, what happened was oil, which was weak, it started to rally. And, you know, at here where it looked like it was going to roll back over, buyers came in and just pushed back up, and then the oil stocks came back to life. And that's why I was looking at some of these downtrending stocks, but they've been downtrending for a while. And so these are, you know, 30-minute trending lower. And a lot of them, you know, you have to wait. Just like the bullish ones, we need to wait now for them to pull back, like the grub. There's lots of them. Even like this here, it pulls back during lunch. A lot of things are starting to stall now, which makes sense as, you know, you come into this time of day. Well, it looks like it's in trouble, Robert. You know, look at the breakdown here on the daily. Let's go out to a weekly. You know, it's broken its uptrend on the weekly, down through major support. It's attempted to stall here. And stocks that break like this, you know, a lot of times, well, besides maybe, you know, just people come into, well, you know, it's had a heck of a move, you know. So I mean, here it had a big drop and broke down, and then it kind of repaired the damage, you know, so to speak, and chopped around here. So now it's had a big run, and there's just profit taking. Things don't go up forever. So it doesn't mean it can't go higher. But we go out to the monthly chart. You know, if you're saying, okay, did it violate the monthly? And it hasn't. So this could pull back like this. It pulled back here on the monthly and it held at major support. Maybe it pulls back toward 100 and it starts doing this type of price action. You know, this chopping around with bottoming tail bars. That's what you would look for. You know, from a, you know, as a long-term perspective, it comes down to, again, that support area. And of course, the daily would be in a downtrend, right? And it gets down into this support area down there. I mean, you know, if you're looking at some type of fundamentals or whatever, when it gets down there, you then look for bullish patterns to set up. APC looks good. Weekly. Forget the moving average, really doesn't mean anything. I like the consolidation. It's broken out here. Yeah, it stalled after making the new high, and it's still moved up here today. So these oil and gas stocks, you know, when you see stuff come back like this thing did intraday, I mean, that's just, you know, institutions stepping up, and, you know, once they fill whatever position that they need to, I mean, this daily pattern is suggesting it's going to pull back. Now, it hasn't taken out yesterday's high, and they're going to pull back. And then, you know, those institutions will come back to look to add at some point, you know. So I was looking at this morning and looked yesterday, and, you know, moving straight up like this for this many days, it's going to come in. And when it does, I mean, I wouldn't short this from as a swing trade, but as a day trade, once it begins to roll over, it should be relatively easy money. So for a few days, and then, you know, where it would pull back, just like looking at the RCL, you know, now we're looking at the same type of analysis, but in shorter time frames. I'm getting a question on the YouTube chat here. How do you interpret a wide range bar? Do you use it as a single bar to trigger a trade? How do you trade wide range bar candle? So we don't use wide range bars as a trigger for a trade. We use it as a alert mechanism, for not a better word. So, and we can look at them in multiple time frames. So these scans at the top here, Right? So this looks for green wide range bars and bottoming tails, which could be a wide range bar, and red wide range bars. So a wide range bar is, for me, something to go take a look. So GE, wide range bar today. And I can show you the formula. I don't know how it's done in your platform, but that would be the formula that's looking for, where that the close is above the open, and the close minus the open divided by such and such plus the high minus the low, right? Whatever. So that is how this formula is defining a wide range bar. And kind of relative to what's going on the chart. And then I look for there to be a certain amount of volume over the last several days, certain price history. I want it to be optionable. And then a relatively low 90-day volume. I don't want stuff that's going to be, real inactive. So some of this stuff could be swing trades as well, of course. So we just start from there, and there's Twitter with a wide range bar. So as I said, it's something to bring my attention to whatever it is that's moving with some momentum. And I haven't, and it's just defining as you saw. So I could define this to say, show me wide range bars that are in uptrends or downtrends, but I'm just going to go through the charts and look and see what it finds. So, here's Microsoft wide range bar, but it's up into the prior high. So there's nothing to do. But the bullish wide range bar suggests that it can go higher when it's coming out of a base. And after it's already run, like Microsoft, it suggests that it's going to stall. Now, this VLO was a wide range bar yesterday, but it's not rolling over. So this pattern is one where, let's assume that it's at the end of the day and it's closed. That small candle body is a signal of slowing momentum. And then we look to see if it actually rolls over from there. And then it could pull back for a few days and provide us with intraday shorts. Right? So here's a wide range bar igniting a move. And here's a wide range bar that I'm assuming is ending the move, but it just hasn't rolled over yet. And we've got the bearish versions. Also being asked by Harry about Nike. Daily chart, pretty much a mess. So when I see a mess, I go to a higher time frame to condense the data. It's not going to report earnings until July. So that's a ways off. And it's a choppy consolidation up at some resistance here. So if you own it, I would say it's a hold. It has a very nice bottoming pattern here. Right. Bottoming patterns are rather messy by definition. And then it cleared those highs. And now when it came up to the low, it's just started to get all whippy and choppy there. So if you don't own it, I would just stay away and wait for it to begin to tighten up. Wait for that volatility to begin to dissipate. So as you go out to higher time frames and compress the data, things become clearer. Sometimes they don't. Things are really wild and whippy. They don't clean up. But that's the whole idea of going out to higher time frames, is to bring clarity to what you're looking at. And then once you have that and you can define your reference points, you can then start moving down to lower time frames to exact an entry based on your bias from the higher. You're welcome, Harry. Oh. So another financial that opened higher and gave it back. What's been going on there? JPM, nothing. This is going to report on Friday. All right, guys, I'm going to take off for a little while here. Things are very slow. You know, markets just seem to be, the Dow is just slopping back and forth here. And it's like the action is primarily in the Qs. Maybe things are going to pull back here a little bit. Spiders popped up there and came back in. Thank you, Cliff. We'll be back here between 2 and 2:30, and we'll see what the afternoon brings. I mean, there's a lot of stuff that that looks like it could be set up to go higher tomorrow. I mean, this is going to report earnings, or maybe it did already. Maybe it reports after the close. Can you explain what the 7 means in the TC formula? It's saying where the range, I think it has something to do with the range. Honestly, I don't remember. Got these a while ago. You're welcome to jot it down. I'll keep it up there, and you could jot it down, and that would be your long, and just reverse it for a bearish one. But it's saying, I forget what the 0.1 is, but so it's saying it's subtracting the high minus the low. And it's giving a reference as to the size of the bar. Yes, exactly what it's doing. Oh. Lots of scans here. I said yesterday, next week we open up the room to subscriptions. And if you have this platform as a subscriber, I'm happy to share these scans with you. Not only will it'll take the scan, so you won't have to type the scan, because if you email me through the platform, I just connect this page, and when you click it, it will upload all the formulas instantly. Then we would just ask that you help scan and find the opportunities. As 14 eyes is better than 2. Hillbilly Girl. This is new, Pam. We just started last week. Just last week we began and decided to continue this week. Hillbilly Girl on YouTube says she has a weekly 270 call on the spiders expiring Friday. I think it will go higher? Well, it certainly looks like it's going to go higher right now, but 270? Well, you're right there. So here's your, right? There's some resistance up here. And I was talking earlier, that this bottoming pattern is larger than the resistance. So it does look like it could go higher. And what you do just on a day-to-day basis as kind of like a quick and dirty is trail prior days lows, and then even from prior days lows, and this one gapped up, but let's just say back here, right? You say, well, 50% of the prior day's range, ideally it doesn't retrace more than 50%. So we don't know what today will end, but you would say, ideally 50% of today's range, it doesn't retrace. And then as it comes up into this area, right, well, there's the top of the topping tail, but anywhere that it could stop. And if I go to the hourly time frame to condense this data, here's where we can see, that area of resistance. So as it gets closer to that, from an intraday trading point of view, the expectation is that there'll be some selling in that area. And then we see how much. So if it went sideways or pulled back very little, that would tell us that demand is strong. If it collapses and goes down to 268, well, the answer is obvious there as well, as to the sellers taking control. So technical analysis, the way we do it, is a process of putting together trends in multiple time frames and looking at support and resistance in them and putting it all together. Hey, Joe, the room will be open tomorrow. It'll be open every day going forward. So I probably will open it on YouTube for the rest of the week. And then once we start, for paying subscribers the following week, Dan and I will come on in the morning and, review open positions, see what the market has been doing. But you're welcome to come into the room itself, because, as I mentioned the other day, YouTube actually is delayed, about 15 seconds or so. Yeah. I had sent out an email with the link, but I can post it later. So, on what platform do your paid room? It says it right on the bottom there, Hillbilly Girl. Zoom. So Zoom has the ability built into it at the click of a button I can broadcast what's going on in the room on YouTube or Facebook. Rather than having to go in and set it up on YouTube, it just automates it, which is pretty nice. Okay, we'll be back a little later and take a little break, relax, exercise, do whatever. And let's see what this afternoon brings. All right, we'll talk later.